Alright, welcome to this new video. In this video, we're going to talk about when you can expect consolidations, and specifically seek and destroy. To understand this video completely, you need to know what displacement is, you need to know where you can find liquidity, and you need to be familiar with all the different PD arrays. If you're not there yet, please pause the video, go back to the earlier videos from the mentorship, and come back to this video later. First, we're going over the framework, and then we're going to the charts to look at some examples at all the relevant timeframes. So without further ado, let's dive in. First, let's go over the framework. The first part of the framework is when there's both buy-side liquidity and sell-side liquidity taken. In this example, you see we first took buy-side liquidity and then we taken sell-side liquidity. What you will see likely next is a consolidation at the equilibrium of that range. So you have your swing high, swing low, and around 50% price going to consolidate. And what price is doing there? Because we already took buy-side liquidity and sell-side liquidity, price is seeking new liquidity. It's engineering new liquidity. And you can confirm seek and destroy conditions when these two are already there. And then you should look at the PD arrays. For example, if you are trending upwards, you want discount arrays to hold and follow through. So you have your bullish fair value gap, for example, you want price to touch that and then move higher towards the high. If the PD arrays are not doing that, they are being ignored, then you have a confirmed condition that you are in a seek and destroy condition. That is very important to know, okay, when are we out of that seek and destroy condition? That's where you need to follow the energy. You need to follow the displacement out of the range. So for example, here you see a massive move to the upside, leaving another fair value gap, then you know when the seek and destroy conditions are complete, when the discount array that's completed here in uptrend or premium array that's in a downtrend, if the PD arrays are being seen, respected, and follow through again. When can you expect consolidation? Before big news event, NFP, CPI, FOMC, price going to engineer liquidity on both sides, and after large range moves. If you have this framework in mind, you will know. So now let's go into the charts to look at some examples. In this first example, we're looking at Euro US dollar on the weekly chart. At the time of this recording, we are actually in this framework. The time of the recording is June 17 of 2024. So this is a live chart. And remember the framework, you have buy-side liquidity taken, then you have sell-side liquidity taken. And after that, you will see consolidation around the equilibrium of the range. We are currently still doing that. So many traders currently are struggling with trading Euro US dollar. And that makes sense because we are basically inside a consolidation with seek and destroy conditions on a higher time frame. So the lower intraday time frame is going to be more difficult to navigate. So for example, when you sweep liquidity, the displacement, fair value gap, premium array is respected here. So you're expecting downside. Where's the low here? So this is a very clean move. After that, place upwards, following through here, taking the high here. But from this point, from the end of December, then we're taking highs, we're taking lows, then we're taking a higher, then another low here, then we see another higher, we are consolidating. So the PD arrays here in this weekly time frame are not being followed through. Because if you are in a trending condition, we took this liquidity, so that means we are with this displacement, you should expect your order flow to be bullish again, gap 1, then you should be expecting a expansion if you are bullish towards this high again. If you're not, that's fine. Then this becomes a failure swing. Then you should see energy and displacement lower, creating a bearish fair value gap towards this low. You're not seeing any of them. No bearish fair value gaps, no bullish fair value gaps, no displacement. You see the consolidation around the equilibrium of the range. This is a seek and destroy condition on the weekly time frame. And on monthly, it's going to look exactly the same. So if you're struggling with, for example, now Euro US dollar, then that's okay because you are in a consolidation profile, seek and destroy profile. So you should be more humble on a intraday basis. Now let's look at Euro NZD on the 4-hour chart. Here, first is buy-side liquidity taken, then sell-side liquidity taken. So first, when this buy-side liquidity was taken, you're expecting energy lower, so displacement lower for value gap, displacement lower again, another for value gap. So here, this move was quite clean. And then there's sell-side liquidity pool being reached, aggressive sells out of the range, aggressive buys into the range. This is very clean. This energy up should suggest that price is going to turn bullish again. Then in a value gap, you want this to be tapped and then displacing higher towards this high and eventually towards the highs up there. But it did it. it went lower, taking a short-term sell-side liquidity pool, then displacing higher, taking out these failure swings. If this was a liquidity sweep, then price should continue higher from this point, but it didn't. It moved away, lower, taking out another liquidity pool. Then it goes higher, leaving a fair value gap. Price should then, if you are bullish, and this suggests the price is bullish, we took a sell liquidity pool, then displace higher, but we didn't. Price consolidated again inside this fair value gap, even took another liquidity pool, and then displace higher, taking out these highs. And then around the equilibrium, we're still consolidating. And now it's the question, okay, this is nice that you're doing this in hindsight, but how could I anticipate this? And this is where the framework comes in mind. When you have a buy-side liquidity pool, then a sell-side liquidity pool, both are taken, so there's not many liquidity in this range left. Then just look at the PD range. Where's the equilibrium of the range? And are the PD rates being followed through? So if you are bullish, you want the bullish value gaps to be held, and also the order blocks, the breakers, all the arrays. If those are failing, that's okay, but then the premium array should hold. But there's no bearish value gap here. So there's no reason price should go down from here. So it's just doing nothing. So when you saw this and this, so once the sell-side liquidity pool was taken and you see the bullish value gap not being followed through, you should already be more cautious because you're probably in a seek and destroy condition. And then seek and destroy is starting. Taking lows, taking highs, taking lows, taking highs. Again and again and again. If you traded this, you probably took some losses, and that's fine. Next time, you know. Now we're going even lower. We are now at the 50-minute chart of GBP AUD, and you know the profile. First took sell-side liquidity, then buy-side liquidity. So both liquidity pools have been taken. So then you should expect or already be cautious that maybe your arrays are not going to hold or follow through anymore. So first sell liquidity, then buy-side liquidity. And here you see energy lower, creating this bearish fair value gap. We also have the order book right here. Then we went lower. So this should indicate bearish prices towards the lows again, but it didn't. Price stopped around this fair value gap and the order book right here, and that's fine, because then price suggests, okay, this was probably just a retracement, an OTE retracement to go higher again. See, okay, here, nice. This bullish array and also the order book here is holding. Then, what you then want to see, okay, probably buyers are in control. You want to see displacement upwards and probably this kind of range holding towards the high. So you mark out your value gap, wants to come back here. It should respect it. You see the first few candles are respecting the 50%. And then most traders will take this trade, which is, from a way of a trending market, is a very nice trade. Wants to, very clean. If sell-side liquidity pool being taken, displacement upwards, OTE retracement, boom. But the thing is, buy-side liquidity was already taken. So there's not much left here. There needs to be more liquidity inside the market. And that is this market doing right now. It's just consolidating, engineering new liquidity. So around the equilibrium of the range, swing low, swing high, around the 50% price just doing a whole bunch of nothing. And you see also in the time, on an intraday basis, price engineers liquidity outside the kill zones, sometimes also inside the kill zones. And then you see later, still does not, it took liquidity on the lows, it took liquidity on the highs. And here is, I think, CPI. Remember, from the framework, you should expect a consolidation or a seek and destroy profile before big news events. Here's your example. The framework should always be in mind. Buy-side liquidity, sell-side liquidity. When buy-side liquidity and sell-side liquidity are already being taken on both sides, expect engineering of liquidity. So sit on your hands, wait. In this final example, we're looking at a NASDAQ 1-minute chart. And this exact condition we recognized during the live stream. We are here at the New York Open, so 9:30. And around 10 a.m., when we want to play our 10 a.m. game, we want to take a nice scalp. You see swing high being created. There was a red folder at 10. So you see displacement lower, creating a sell-side liquidity pool down here and a buy-side liquidity pool up there. Then price comes back for the highs. That's fine. You can just have a liquidity sweep before the real move down. But then what happened is we went to the sell-side liquidity pool. That's nice. But if you, for example, have a bearish bias in this case, then you want premium arrays to follow through. And this move was quite nice, right? Because here, value gap 1, value gap 2, to the sell-side liquidity pool. If you're still bearish, you want price to go to this low and towards these lows, but price didn't because price already took buy-side liquidity and sell-side liquidity. So then when you see this happening, price comes all the way back with this kind of raise, so bullish value gap higher, then you know, okay, buy-side liquidity taken, sell-side liquidity taken, then we're going back up again. Hey, we're probably inside a seek and destroy condition. Then a few minutes later, around equilibrium, 50% range, swing high, swing low. You see price is just doing nothing inside the kill zone. So live on stream, we talked about, okay, if we take the liquidity, but then display it up again, you have the high and the low being taken, you're probably going to see a seek and destroy condition. So when price came up here, I took the trade off because I knew, okay, probably this is not going to be my session. And let's see what happened after. It came back again for the low. Then it came back again for these highs. Then it take another swing low here. The lows, the highs, seek and destroy. But you already could recognize this by using the framework, buy side liquidity, sell side liquidity, consolidation around equilibrium. Then you should take your trade off. Okay, so to reward you to sticking to the end, I want to give you something extra. Because seek and destroy conditions are maybe scary, low probability, but you can actually trade them. Personally, I'm a trend trader, and the things I teach you is all about following your trend. So uptrend, downtrend, premium erase, discount erase. But if you are aware of this framework, so you know, okay, buy side liquidity taken, sell side liquidity taken, and you see this, you know that you are inside a seek and destroy condition. So that means you know price will probably go take another low before going higher again. So smart money is order pairing right here, trading the so-called turtle soup before going higher again. You can trade this. You can just take a long under the low. You know you're seek and destroy, so probably just go to street liquidity here before going up again. Same at the highs. You know, okay, there's buy side liquidity here. Seek and destroy. I can take a short position right here. Seeking opposing liquidity. Sell side liquidity here. Here as well. Buys. Where's that buy side liquidity pool? And so on and so forth. Again, I'm not trading that because my models are mainly based on trend trading. So I'm not trading turtle soups. I'm not trading seek and destroy conditions. But if you recognize it, go for it and train your eyes to do that. Because if you can recognize seek and destroy conditions and you can even trade them, then you can even know when not to trade them. Thank you for watching this video. In this video, we went over when you can expect consolidations and seek and destroy conditions. We went over the framework and then we looked at different time frames to further develop your understanding. At the end, we even went over how to trade these conditions so you can trade both trending conditions but also consolidation conditions. If you like this kind of videos, please like and subscribe to this video, share it with all your trading friends, and I'll see you in the next one.